Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Tuesday, 18th of August. Total dog days of summer now. My hunch is over the next week or two, it's just going to be a long, slow grind. Stock markets, whiffle waffling. Politicians are doing their funny things. Spend some time at the beginning of the broadcast for the site going through historical references of the Democratic National Convention that usually happens mid to the end of August. How usually this sort of inertia for the challenger, if it is a Democrat, peaks around here, and we're starting to see M's come in on Mr. Biden's popularity and W's on Mr. Trump's. So I do believe the horse race has officially begun. I don't think that they're going to really break the stock market too hard ahead of that political event. It's not really in the 1%'s best interest. And as long as Mr. Trump actually looks like he's got an outside chance, I think they'll try and keep the market up into that event. But who knows? Only time will tell. Usually, all things being normal, we would be looking for some sort of seasonal peak in risk assets. Usually as we're sort of heading into the latter part of August, early part of September, all the refiners start converting their equipment from from unleaded gasoline to heating oil. And the sort of premium for the hurricane season in the Gulf of Mexico starts to sort of peak and then abate. As well too, sometimes through the summer you get just really unicorny type stock market action. Even what we've seen of late in the crypto market, I think, is very unicorny kind of price action. Very typical hallmarks of a top. Does it, like I said, ahead of the actual big political event, does it make sense of them to break the market, considering the way they've propped the market up the whole way here since March? I don't see any reason why they were going to walk away now. Once we get on the other side of that political event, though, with the market as lofty as it is, and our breadth indicator rolled over here the end of June. Remember, we were sort of looking for that sort of market pivot there, the end of June, beginning of July. I don't really have a lot of interest in buying risk assets in this kind of window. There are some interesting special names that popped up here and there. Yesterday we had a really great presentation from Jamie, and he told us about a technology stock, I think, or tech stock. Not going to cover off the ball earnings wise, so I'm very interested in picking up names like that. Names that are missing earnings, who are very leery about even the slightest bit of interest about those kind of companies in this kind of environment. And as long as this breadth indicator looks the way that it does, my general propensity is cool your jets. And what's fascinating, of course, stock market just grinding its way higher. We did look at the cash market, and we found it interesting that the cash market has hit this chaos objective. Of course, all the cash market people got all excited at the stock market making new highs. Still think that these S&P futures can work a bit higher. Hell, if we get into insano face repo mode, not exactly sure where the low is here. Where are you? Are you all the way down there? Anyway, I could very easily see us brush up against this trend line peak up here. That's not out of the question. At the same time, too, my insurance policies, I was picking up some insurance policies here. Obviously, they're under the water. But we're thinking about, adding to those February, March, April kind of positions for next year. Tell you, those options are looking very attractive. So, dog days of summer, low volatility. Could we see some spike here in volatility here coming into Labor Day weekend? Sure. Usually the market's relatively well bid into that holiday weekend. The only thing I think that could derail this, and I found it fascinating, is, of course, certain parts of the government down in the States are really trying to push this school reopening. And what we're seeing is those that are coming back to school instantly, the institutions are just closing the door, slamming it down because the cases are just going absolutely nuts. So I don't know how this political football is going to play out. I don't know whether it's such a good idea to force the kids all to go back to school, and does that, almost reinforce that second wave, third wave kind of stuff. And then do we have one of these massive backlashes? And ironically enough, this university here has basically said we're just going to move everything online. To hell with it. It's not worth the risk. And I got a funny feeling that's basically what our future through September could look like. Maybe, some sort of insane crisis sort of scenario there causes the market to break. I certainly don't think it's going to be engineered by central bankers. If anything, they're in sort of, oh my God, we got to support this market kind of frame of mind right now. U.S. dollar took another big punch in the nose, broke through recent lows here. So, risk on, risk off. That supports this idea of the stock market working its way higher. Is this a good buy up here? I don't think so, but nonetheless. But U.S. dollar is working its way lower, and we had these two funny little chaos levels that somebody through the Daily Brief reminded me that there's a good old Kavarkanator level, and there's the original double bottom. Maybe we have to come all the way down to here. But it's interesting how we do have these two chaos levels just floating there. And I had mused the other day, well, gee, sure looks like to me we got to hit these damn levels. So no bottom here yet. And as we had sort of said there last week, or I guess a week or two ago, we could think about bottom, but we got to see a W here first. And no W yet. So that's probably going to help the gold bugs. Maybe they're going to clear off the dust and come in and attack the long side again. Who knows? My hunch is that gold market and the metals markets. Now we're hearing like Warren Buffett is FOMOing into gold. Oh my goodness. The stage is set for some sort of insane face rip move higher on the gold price, very much like Bitcoin did in 2017 into this cycle apex peak here into November, December of this year. And my hunch is the gold market actually tops out somewhere in like early January. Almost identical to the way they did that to Bitcoin there a couple years ago. And all those people, of course, got tax loss bills there, if you will, up at the top of the market because they bought right up at the top. But having said that, when I look at the risk on, risk off, I actually am sort of leaning, again, these oil stocks and oil itself, not really breaking out, but pressing up against the highs, threatening to break out through this high. So they're pressing higher. The stock market is pressing higher. You can see how close we are to new highs there. Here we are in one of these screwy scenarios where everything, they're just throwing the baby out with the bathwater with the U.S. dollar. Everything is moving up all at the same time. Not sustainable, not healthy, not normal. 2020, ay caramba. So we did have a little bit of a buy signal come in there on the bond market the other day, and I think I had I don't know whether I showed this to the public, but I like to watch my little algorithms that we teach people to program in our education program, and it was spitting up bullish setups on, not that one, I was just there. It was spitting up bullish setups on, screen's over there, that's why. On the bonds the other day, and it, gee whiz, looks like they're continuing on. Where was that? Look at that, eh? So, this bond market actually is pointing higher now. It looks like it's got a head of steam on it. You can see value. Really we should be thinking about bond prices working their way back up into this area. So, and, the irony of it all is that we're just trapped in this crazy-ass monster range that we've been talking about forever here. So, if this is moving up, that probably shouldn't be good for stock market. But I don't know, 2020, crazy year. In fact, actually, this is a really good example just looking at this particular range, we tested the low of value. It looks like we've accepted back into value, so now we're probably got to go back up to value high. Good old chaos and reload zones and the original market structure top. Man, to be a bond trader these days, that'd be a great futures trade to track. But yeah, what the hell? This doesn't make any sense. How can the bonds be going up, the stocks be going up, oil's going up, hey, Bitcoin's going up, gold's going up? I mean, this is nuts. But, it's 2020. How are you supposed to make sense out of all this? I guess back to our risk on, risk off conversation. Bonds look like they want to work their way higher. And our gold, in a weird sort of way, I get the impression that this was just a market that was set up to, oh my God, it's going to break some people's hearts. Not really a top, but just a pretty damn good trade if you're a slick trader. Notice 50% retracement right on the nose, doink. And I think we did the math. This is almost like a perfect 2-to-1. Interesting to kind of think Wyckoff check, the old historic breakout highs. Obviously, there was a bunch of open orders sitting there to buy right at that level, and they all got filled in here. So, my general commentary, same sort of thing here. Probably we're best to wait for some sort of consolidation. If we're thinking about a new trade in here, we've done 33%, so bots can now start, coming alive. As it stands right now, there's nothing for me to do. Lower time frame traders, you could probably start hunting reload shorts against the original highs, looking for a retest of these candle body lows, which would be sort of what does the nomenclature, if this is bullish, right? Something like that. 3 higher lows, 3 nice consolidation, and we set up our next leg. But right now, there's nothing for me to do here. Could the market zip up here? Sure, but it's not really a high probability setup for me to trade this, so I don't really do anything right now. Late summer market, summer doldrums. Why is Brian doing 2-hour videos in the middle of the summer, not really talking to too many people? I don't know. Brian loves the sound of his own voice, so... I get the impression this is probably a really good opportunity. Just let the dust settle. The altcoin market's jumped up violently here, even Bitcoin for that matter. Maybe just cool your jets, wait for new setups to develop, and start hunting again. But right now, I'm just cooling my jets. More sort of anecdotal evidence of cooling your jets. Maybe a potential little M coming in here on our small caps versus large caps. Which would be sort of, speculative monies cooling its jets. And I see a lot of little ones sort of kind of heavy here. A lot of the ones that were banging out doubles and all that kind of stuff, they're all coming back down to earth. And sadly, the stocks that the publicly chased, they're getting, it's just like, oh my God, this is just an absolute grind. And I don't like those kind of markets. I want to be selling into rallies so I don't have to worry about that kind of stuff. And if anything, we've had a few little ideas that we bought recently that are kind of waffling, kind of like Emmys up here. And I'm kind of like, do I really need to be in this? Man, blow it out. Just get the hell out of there. So, heading on over to crypto. Kevin did a really great presentation. In fact, there was one of his ideas, sort of that specialty situation. Beautiful weekly W. And I was just like, I've got a whack of it free from the last cycle. Maybe it's time to start loading up new cars. And as he was speaking, I went and bought some. So I don't know whether I really want to tell you guys on the public channel what we're buying. I'll be more than happy to tell you when we bang out doubles and stuff. But on balance, I wouldn't really recommend the public come in too hard on the buy side here. You're coming very late to the party here, people. If you are a Bitcoiner and you're enjoying Bitcoin rallies, I suppose we have these ABCDs that want to take us up top here. I don't really have any signs of outright failure yet. Insane nosebleedy levels. If we did have to pull back, there's lots and lots of room for this thing to pull back. So it's kind of like don't chase. It's your hard-earned money. Remember, when prices come back down, nobody's in the public's going to really care what your account balance is. You want to join the sort of the cool kids, the popularity, and you want to just go market buy this stuff? Okay, well, that's fine. Just be prepared. You might be sitting on your trades for a while. Why does this always do this? You want to grab the right level, and it changes everything. Anyway, there was one other level that changed here, right? It was that one. So, as it stands right now, if we are working our way higher, I'm probably thinking like 15, 16. See, there's a big chaos level sitting up there at 16 and change. If we are ready to sort of pause, my first stop would be 9 and change, basically against all of these key support lows. And if the market fell out of bed, and really where I'd only be suggesting the public even think about investing your hard-earned money in Bitcoins, reload zones are still, 56, 5,700 up to about 7 Gs. And if I understand correctly, I heard today that the newest S19 miners, their cost of production is somewhere around $4,000 or $5,000. So you put it all together. Is it a bit risky? Late summer, coming in on the long side on crypto? I think it's pretty straightforward. The only thing here is, I'm sure there's lots of people like, where's the top? Where's the top? Where is the exact top? And that's always a mug's game. What I would just simply say here is, and this is what I told the community, I can't believe how cliche this game really is, even after all these years that I've played this. Hopefully you all watched over the past 6 months as we loaded up in February and March, and as the market came into its summer seasonal peak, we were banging out doubles. And really, you want to make this really, really easy, I would actually suggest all of you turn all this crap off and come and bug me maybe the middle of February, March next year, and we'll take a look at the whole market and do it all over again. Buy when it snows, sell when it goes. So, food for thought. Unfortunately, I don't really have anything new to suggest or trade here. And just be forewarned, like I have publicly said, if they pull the rug out from underneath the market, when the market breaks after the fact, it'll be too late. You won't get those high prices. So just don't put yourself into a position where, if the market does break, you're going to be caught off guard. This is just generally not a good idea. And of course, as we always say, don't chase, don't chase, don't chase. Okay, I think I'll leave the public rant at that for today. I hope you guys got some half-decent value out of all that. Have yourselves a great rest of your day. All the best, and bye for now.